Hey everybody, Carl from daytradetowin.com here. In today's episode, we'll take a look at something very basic when it comes to day trading and price action. We're going to have a look at support and resistance. Today we're going to look at horizontal support and resistance. There's also diagonal support and resistance. And when I say diagonal, I mean the nature of the market when it's trending. We will have support and resistance in trends as well. Diagonal support in the candlestick chart, an uptrend would be diagonal from the bottom left corner to the top right corner, just like you see in the chart here. But we'll take a look at diagonal support and resistance in the next video. Today we'll simply start with the basics, because this is a series in the basics of price action day trading. And horizontal support and resistance, that's the most basic one. I believe that most, perhaps all, price action traders use support and resistance in some way. There are many ways to use support and resistance in your price action analysis, and this is a topic that we will revisit further on in this price action day trading series. And we'll take a look at more and more advanced uses of support and resistance that you can utilize in your day trading. But let's start with the basics and define support and resistance. Now, this is our own definition. If you listen to somebody else, they might have different definitions. They might interpret support and resistance differently. Perhaps there's even an official definition for this somewhere, but this is how we define support and resistance, and I'm pretty sure that what we have found to work in the market is better than what someone has found to work in books of theory. Alright, so let's define support. We define this as an approximate price level where the market is not able to move lower for the time being. And the reason for this is because buyers will step in and start buying when the market nears and reaches that approximate price level. And sellers, they will stop selling because they don't believe that the market is going any lower. So it's the combined force of buyers and sellers. The buyers are active and they're the primary force. They do most of the job. The sellers basically help by not participating. So the sellers are passive and they're the secondary force. So the sellers do not actively sell, so the market is not able to break down through the support level. So when we think about support and think about what we learned previously in this price action day trading series, what we learned about supply and demand. In this case, the demand will force the price upwards from the level of support. The lack of supply is secondary. If there had been active selling, short selling, then the price would probably not stop at the support level, or the buyers would have to be more active to overcome the active selling. And the amount of buying could stay constant as well, and support could still hold if the amount of selling would diminish. So the buyers do not have to be actively trying to push the market up. As long as there's more buying than selling, the price will move up. That also means that if there's less selling than buying, the prices will move up. So those are two different things with the same result. More buyers than sellers, then price moves up. Less sellers than buyers, then the price also moves up. We get the same end result, but you will either have the buying with bigger force and selling staying at normal levels, or you will have buying at normal levels and sellers withdraw. So the buyers and sellers can be active or passive at any time, and it's the rate between buyers and sellers that determine where the price goes. And resistance, we define resistance the same way, but opposite of course. It's an approximate price level where the market is not able to move higher for the time being. And this is because sellers will become very active and start selling when the market approaches a certain price level, and buyers will become less active and stop buying. They see all this supply coming into the market and they don't expect the market to go higher at this time. So here it's also the combined force of the buyers and sellers. In this case, the sellers are the active ones. They are the primary force. They are the workhorses. The buyers do not actively participate in creating the resistance. The buyers are simply not buying, because it doesn't make any sense buying when the sellers are hell-bent on pushing the market down. So just like you would step off the railroad track when you have a freight train coming your way 60 miles per hour, the buyers will step aside as they see all this selling coming in. So they are passive and they're a secondary force. Of course, this is simplified. There will always be some buying and selling going on, regardless if we are at support or resistance, but the idea is that the amount of buying will be much less than the supply when we are at resistance levels. And we know from a previous video in this series that when supply is greater than demand, the prices will fall. Same thing at support. There will of course be selling at support as well, but the buying, the demand will be much larger. The buyers will be stronger. The buyers will be in control. And when demand overcomes supply, prices will rise. So at resistance, there's a lack of demand. The buyers are passive. The role of demand is secondary. If there had been active buying, then the price would more easily be able to move through resistance. And in that case, the seller would have to be more active to be able to push the market down. And you should realize that the support and resistance will not appear at an exact price. Many traders draw lines in their charts because it's so easy to do in these charting platforms. And they tend to be very stubborn about their lines and want the price to reverse at the exact price, otherwise they would lose confidence in their lines. We, on the other hand, consider support and resistance to be approximate price levels. We don't care if the price moves down through the support line as long as it comes back with determination. You will very often have candlesticks that have their shadows penetrate the support line and close above, like you have here. This would be a support line. You have these candles here penetrating, but support still holds. These candles have their shadows penetrate the support line, but the candles close above this line. We tend to consider support and resistance to be approximate price levels like this instead of a thin line here. So for example here, these candles also hold support, even though they're much higher than these candles right here. Same thing here, you have candles testing this approximate level of support, and it holds. Same thing could be said here. You have this downtrend over a few candles. In this example they end here, but that's still a test of this approximate level of support. So we think you will be much better off if you don't just consider thin straight lines like this. Instead you could use a channel and just identify approximate levels of support and resistance. You see these shadows here, they still penetrate quite far down below this channel, but we're still having support at this approximate level right here, somewhere around 2665, 2680. That's an approximate level of support. So you will very often have candlesticks that have their shadows penetrate the support line, and they would close inside the channel. They would close above the support level. And same thing with resistance lines. There will be frequent candles. You can have candles that penetrate the line, but they would reverse and close back inside. There could be numerous candles like this, but they would all close here back inside this range. And this range, here you would have resistance, and here you would have support. And remember, this is an approximate level. It's not exactly 2690. It's around 2690. So this is normal market behavior. The market is testing these levels. The market tries to push through, but it's not able to close here above resistance, above this resistance level. You can also have several candles pushing through like this, and they could even close here above, but you would see that these candles get smaller and smaller, and then you would have a big red candle that moves down to the lower side of the support, the resistance level here. So these candles that penetrate and close above resistance, they tend to get smaller and smaller. If you watch volume, the volume would be small as well. We have 4 candles here, you would have small volume, and then this 5th candle that moves back into the range with determination. It's big, it's red, and it would be a much higher volume than these 4 candles here that moved outside the range, that moved above resistance. So in this example, the resistance still holds until this happens, when you have big green candles moving through. If we would look at volume, the volume would be, for these candles here, the volume would be something like this, but then you would have these big green candles and the volume would rise here, and that would show you that there is a lot of demand. There are a lot of buyers stepping in and really pushing the market through resistance here with determination. And volume, that's something that we are going to cover in future episodes. Volume is something that's very important when you trade price action. The next video in this series, we'll take a look at support and resistance in trends, and that's something that we call diagonal support and resistance, but we will also cover volume in future episodes. But that's it for today. That's the basics of support and resistance. Until next time, take care. Bye bye. Thank you for watching. We have a whole bunch of videos available on our YouTube channel, and we're producing more videos for you to watch every week, like live day trading, educational videos, and more. So please subscribe by clicking the button below in the bottom right corner of this video. Please give us a thumbs up for encouragement, and always, if you have any questions, feel free to reach out through the comments below. And remember to visit daytradetowin.com.